Hello everyone, welcome once again to my channel Green World Investor. Today's topic of discussion is Sovereign Gold Bond 2023. So in an earlier video I've already explained why we should invest in gold in 2023, the link of which I have shared in the description. But now in this video we will talk about one of the popular and easiest ways to invest in gold, that is through sovereign gold bond. So in this video, we will cover various subtopics like what are sovereign gold bonds, how do they work, what are their features, what are its pros and cons, sovereign gold bond versus physical gold, and things like that. If you want to know anything else, you can write a comment to us and we will take it as a separate topic. Okay, so why sovereign gold bonds? Sovereign gold bonds are bonds that are issued by government and they are backed by gold prices. Also, they are available in different denominations as per your budget, as per your liking. You can buy them in like 2 grams, 5 grams, 10 grams, etc. And they come in a tenure of 8 years. And one of the most important benefits of sovereign gold bonds is that you do not have to worry about storage, which is a major concern in case of any physical gold that we own. Also, you can easily buy and sell these bonds through exchanges. The best way to invest in sovereign gold bond is to buy it as and when the government issues them periodically. Also, you get a 1 to 2% discount if you buy digitally, the digital gold bonds. Now, how do sovereign gold bonds work? The prices of sovereign gold bonds are directly related to the gold prices. So if the gold prices go up, the value of your bonds will go up. If the gold price go down, the value of your gold bonds will go down. So this is a direct correlation, and that is why sovereign gold bonds have gained so much popularity, because it is as good as owning physical gold. You're getting the same price advantage, and plus you also get an interest of 2.5% per annum that is paid to your bank account on a semi-annual basis. So suppose you bought gold bonds for 50,000 and you're earning an interest of 1,250 rupees annually. But if the value of your gold bonds increases to 60,000, you will still get an interest of 1,250. That is, this interest will be calculated on your original purchase price, which in this case is 50,000, and not on the appreciation, that is rupees 60,000. Also, the interest that you have earned will be taxed at your regular income tax slab rate. Only the capital gains will not be taxed. This is another one of the biggest advantage, one of the most preferred investors' choice of how you can save tax also by buying sovereign gold bond. So I hope you're finding the video interesting. And if you wanted to know anything more about gold or a sovereign gold bond, you can leave a comment. We will take it up in another video. Also, like and subscribe the channel. Let's continue. So why we should invest in sovereign gold bonds? I have prepared few pointers which will drive the point home as to why we must invest in a sovereign gold bond. So number 1 is storage. Number 2 is capital gain tax advantage. Number 3 is high security. Number 4 is low transaction cost. And last but not the least, on number 5, we have hedge against inflation. So let's take a look at these points. However, I'm sure these points are self-explanatory, but why? So number 1 is the storage option. With any form of gold, be it jewelry, gold, coins, bullions, biscuits, whatever, one of the biggest concerns is storage. Not only you will have to empty a space in your closet or your locker, or take a locker in the bank, pay locker rent on it annually, and then there is always this concern of theft. So there is always a, something nagging in your mind. There's always some security concern when you're owning physical gold. However, that is not the case with the sovereign gold bond. So security, and then comes the second point, which is, the capital gain tax. So with all the forms of gold, be it physical or digital, are taxed on the capital gains are applied to it. However, so this is not the case with a sovereign gold bond. All gold bonds have this problem, have this attract capital gains. So all the short term capital gain is taxed at your income tax slab rate, and all the long term capital will be at 20% with indexation benefits. Now, third point I spoke about was security. Why security? Because these sovereign gold bonds are backed by government. They have government backing, as they are the issuing party. So even so nothing can go wrong with the government. I mean, kuch kharab bhi hoga, they will print money and give it back to you, of course. And if there is something wrong with the government, then we have other issues to worry about. So with sovereign gold bonds, your investments are very secure because there is a government backing. Now, fourth point was low transaction cost. Why? Because any form of buying gold, the jewelry or the physical gold that we buy, they attract a high transaction cost, which can vary from 5 to 20%. With jewelry, there is another making charges. So all these have high transaction cost, which is not the case with sovereign gold bonds. But many people consider physical gold as the real form of investment. But with that, they have to bear the high transaction cost. And so another reason to invest in gold and sovereign gold bond is that they provide us the much needed hedge against inflation. तो ये तो जग जाहिर ही है कि हमारे देश में, and also everywhere, I think people have preferred gold as the most important and preferred way of investment, because सदियों से हमने देखा है कि चाहे कोई भी इंसान हो, they always have some form of gold with them. It could be a gold bangle or a gold chain or be it anything. क्योंकि घर में भी आपने देखा होगा कि शादियों में और एनी टाइम, एनी ऑस्पिशियस टाइम, पीपल जनरली गिव गोल्ड टू द daughters, daughter-in-laws or relatives, because they also know कि when times are not right, or God forbid, if there are distressing times, gold can easily be sold off or pawned to get some form of cash. So that is the same which applies to the sovereign gold bond also, because when at times of inflation, the prices of gold goes up, and which is replicated in your gold bonds value. तो आपके bonds के value भी बढ़ जाएंगे. So they provide us with a much needed hedge against inflation. Now, talking about the drawbacks of sovereign gold bond is only one, that it is not very liquid as compared to other forms of gold and ETFs. The sovereign gold bonds are not very liquid, though they can be bought easily through exchanges and bank will give you overdraft or loans. Yet the market is not that developed. It is not yet there कि liquidity बहुत high है. It remains really illiquid at the moment, and to get some funds, you will have to bear some cost. However, it's not a big disadvantage in my opinion. But remember, if you get out before the 8 years tenure, you will have to pay you will miss out on the capital gain tax advantage. So now let's consider some of the other let's talk about other features of the sovereign gold bond. So individuals and HUFs, they can invest into sovereign gold bond up to 4 kgs of gold, which is not a bad higher limit, because it is allowing you to invest up to 2.2 crores. And for family trust, the limit is further higher to about 20 kgs of gold. The second interesting feature of gold bond is that it was last issued by the government in December 2022 at 53,000 rupees per gram. The third feature about SGD is that you can easily buy and sell them through online banking. Many large banks like ICICI, HDFC, SBI, they have this option where you can buy these gold bonds through online banking, and the process is very frictionless. I mean, I like almost 5 years back when I started, I bought it at that time, and the process is very smooth. So it is very easy to buy it online, and the process is very convenient. And um, the reason SGD was launched, this is the most interesting and most, beautiful reason why it was launched, is because India's import bill is going high. It is importing so much of physical gold because of the love of physical gold that we have in our country. As we have already mentioned, that it gives a sense of security. People from the yesteryears, they still prefer to have, physical gold in hand rather than these new age e-gold. So to reduce the pressure on the import bill, the government had launched this scheme. It was putting pressure on the foreign reserves. The import bill had gone up so much. The government wants to decrease the physical gold, and it also has imposed 12.5% duty on physical import. So that was the reason why the sovereign gold bonds were introduced back in the day. So I hope you find my video useful. Please like my video and also subscribe to the channel. And thank you. Have a nice day. Bye.